Time for the Word on Wall Street. Top investors watching your money. Joining me now, Laffer Tengler, Investments Chief Investment Officer and CEO Nancy Tengler, Michael Lee Strategy Founder Michael Lee, and Bios Advisors at the Rockefeller Capital Management Managing Director, Michael Bappas. Michael Lee, let me kick it off with you. Futures are pointing higher this morning as investors look ahead to a busy week of earnings and economic data. Big tech earnings in focus. Alphabet, Microsoft, Meta, Amazon, Apple, all reporting quarterly results this week. Mike Lee, what are you watching?
So I am not expecting that great of a week of earnings, all things considered. However, expectations are relatively low. You haven't necessarily had earnings warnings from a lot of these companies, but you're starting to see some real economic cracks around the surface. Amazon is stopping production, or I'm sorry, it's stopping the building and taking out of new warehouse space. That's kind of a worrying sign. Anybody that follows the commercial real estate market has known that Amazon has been a major catalyst in industrial warehouse space for almost the last decade. Okay, you start to look at a Microsoft freezing hiring in their Azure unit. That's their cloud unit. That's been the key driver of their company. Facebook, now known as Meta, has been an unmitigated disaster since Apple changed the iOS terms of service. They are now transforming to the metaverse, which is something weird that most people won't use, and I think a lot of people out there don't even understand. They're in a real business transition period. I don't know when they make it out of it. And then Apple also removing a lot of job openings. Okay, the big concern that very few people are talking about with a lot of these big companies is the strength of the U.S. dollar and what is that going to do not only to this quarter's earnings but the outlook going forward. That being said, besides Facebook, any of these other companies have a really kind of disaster sell-off on earnings. I'd be a buyer here, and why I say that is we are not on the bottom of the market, but these big tech companies that produce tons of cash, that are still going to make a lot of money, all things considered, historically bottomed before the overall market. So all these big names bottomed in November of 2008, where the market didn't bottom until March of 2009. So I'd be a buyer on weakness of these names. If you have a multi-year time horizon, this is probably a good entry point for a lot of these. Maybe not Apple, just because Apple has weathered this storm, but it's time to start looking at an Amazon and a Google. And then if Microsoft takes a big hit this week, I'd be a buyer of that too, because I think these big companies continue to dominate and continue to win, but there's a tremendous amount of company-specific headwinds with each one of these companies, as well as some really horrific macro tailwinds that are kind of kicking everyone's butt at the moment.
Speaking of macro, it took the NASDAQ composite 15 years to recover back to the level it was at the peak of the dot-com bubble in the year 2000. 15 years, not months, years. Michael Bappas.